The UK economy is beginning the process of adjusting to a new and as yet uncertain economic relationship with the European Union. Monetary policy cannot prevent the weaker real incomes likely to accompany the move to new trading arrangements with the EU, but it can influence how this hit to incomes is distributed between job losses and price rises. And it can support UK households and businesses as they adjust to such profound change. The MPC has long emphasized that the effects on inflation of the Brexit process would be the product of its impact on demand, supply, and the exchange rate. And it has consistently stressed that as a result, the implications for monetary policy would not be automatic. The August inflation report, released today, updates on how these and other dynamics are affecting the economic outlook. Since the referendum was called, UK households, businesses, and the financial markets have reacted at different speeds and to varying degrees to the prospects for the UK's departure from the EU. Financial markets, particularly sterling, marked down the UK's relative prospects quickly and sharply. Households looked through Brexit-related uncertainties initially, but more recently, as the consequences of sterling's fall have shown up in the shops and squeezed their real incomes, they've cut back on spending, slowing the economy. Businesses have been somewhere in between. But since the referendum, they've invested much less aggressively than usual in response to an otherwise very favorable environment. The MPC's projections continue to be conditioned on a smooth transition to an average of possible outcomes for the UK's post-Brexit trading relationships. To be clear, assuming a smooth transition doesn't mean the MPC thinks UK households and businesses know the end result of the negotiations that have just started. Indeed, in the MPC forecast, uncertainty about the eventual shape of the UK's economic relationship with the EU weighs on the decisions of businesses and households and pulls down both demand and supply. Rather, the assumption of a smooth Brexit means that UK households and businesses act on the expectation that the UK will forge a new relationship with Europe without material disruptions to trading conditions or financial stability. This simplifying assumption has broadly fit the behavior of the real economy over the past year.